collapse of the cryptocurrency exchange FTX left some of us shocked and even bewildered. What just happened? And what does it all mean for cryptocurrencies in general? It's not just the size of the disaster, although at one point FTX was valued at $32 billion. And it's not just the speed of the failure either, although FTX filed for bankruptcy only 3 days after asking rival exchange Binance for help. It's also the substance, or maybe the lack of substance, at the core. Is crypto for real? Good evening. I'm John Nery, and you are in the public square. While we focus on directly political topics, we also need to understand what's going on outside politics, because everything is connected. So in the wake of the FTX bankruptcy, we have many questions. Fortunately, we are joined tonight from San Francisco by Benjamin Pimentel, senior reporter covering cryptocurrencies, financial technology, and blockchain technology for Protocol. Ben, or Boying, as he's called by his friends and schoolmates, of which I am one, was a reporter for the San Francisco Chronicle for 14 years covering social issues, and a tech reporter for Dow Jones Market Watch for 7 years. And his books have been published by the Ateneo de Manila University Press. Welcome, Ben, and thank you for joining us in the public square.
Hi, John. Good to see you again, and glad to be here.
Yeah, let's start with Sam Bankman-Fried. What did he try to do with FTX, and how did he end up like this?
So FTX is a marketplace for cryptocurrencies. So that's a place where you can buy and sell cryptocurrencies like Bitcoin, Ether, Dogecoin, and also digital assets like NFTs. What happened was it suffered a serious liquidity crunch, meaning there was not enough money within. It turns out that wasn't enough money within the system or the ecosystem that they have, and that triggered a bank run. Essentially, sort of like in a typical bank run where the depositors realize that there's no money, so they try to take the money out quickly, and that led to the collapse of the marketplace called FTX.
Was there a single turning point that led to what FTX's own bankruptcy lawyers call this most abrupt and difficult collapse in corporate America, in the history of corporate America? Or were there several turning points?
Well, crypto itself is going through a major downturn. It started actually a year ago. Crypto was used to be worth $3 trillion in terms of the value of the cryptocurrencies on these different exchanges and in the different blockchains. It's down to about $800 billion now, so more than $2 trillion wiped out. So there have already been problems within the industry itself. What happened with FTX and Sam Bankman-Fried's company itself was triggered by a report about 2 to 3 weeks ago that there were fuzzy finances with Alameda Research, which is a partner company and essentially is a hedge fund. And so that led to speculation and also a move by Binance, its rival marketplace and crypto company, to pull out some of their funds from the FTX ecosystem. And then there were talks about them buying FTX, but then they backed out. So that was mainly the trigger, that was sort of exposed the weaknesses of the finances of the FTX company.
Yes, if I remember the chronology correctly, I think sometime on November 2nd, the CEO of Binance said, in light of the reports, we're pulling our money out. And then a couple of days later, he posted that Sam Bankman-Fried had gotten in touch with him to see if they could help FTX. And the very next day, Binance said no, they're not going to pursue their planned purchase. So, and then after that, it just collapsed. In 3 days, they had to file for bankruptcy. Has anything like this happened in crypto? Maybe not this fast, or maybe not on this scale, but bankruptcies like this.
What's stunning about this is FTX is a major player. It used to
Mm-hmm.
be the third largest crypto exchange in the world. Binance is number one. Coinbase,
Mm-hmm.
which is US based, is number two.
Mm-hmm.
Um, in the summer, around May, June, there was a crash of the Terra Luna ecosystem, which that's a
Mm-hmm.
cryptocurrency pegged to which is tied to a stable coin, which is supposed to be each stable coin is supposed to be worth $1. But this one is they use algorithms to make sure that the value holds. But that system is also tied to the value of the Luna. I mean, it's really confusing. But
Mm-hmm.
what happened was the users and investors lost faith in that stable coin, which triggered
Mm-hmm.
a collapse of the other cryptocurrency and the entire blockchain supported by Terra Luna. So,
Yeah.
in your question is whether something like this has happened. This is the worst. Terra Luna's web was really bad, and that
Mm-hmm.
was around the time when the crypto was already collapsing, was going through a steep downturn. But this FTX crisis has just made it worse.
I want to separate the blockchain technology, which is at the core of crypto, from the rest. The raising of funds, and so on. Almost anyone with some backing can set up his own or her own crypto exchange, float his or her own cryptocurrency. I remember reading something about Sam Bankman-Fried. Um, I think it was a venture capitalist from, if I'm not mistaken, Sequoia Capital, who was so ecstatic about meeting him and the prospects, and he even that capitalist even said this he might be the world's first trillionaire.
Mhm.
Of course, on hindsight, this sounds like wow, some uh, terrific example of naivete. I have a question about, I don't know, the responsibility that VCs and banks and other people with access to huge sums of money bear for a collapse like this. This purely the fault of FTX, the new CEO appointed after the bankruptcy filing? John Nery described what he found as what's that? Absolute loss of corporate controls, absolute absence of corporate controls. Is this just strictly the fault of FTX and its corporate culture and SBF and the way he moved, or do other parties bear a responsibility for this?
I guess we should put it in the context of the history of crypto, which
Mm-hmm.
began more than 10 years ago, actually
Mm-hmm.
2009, when Bitcoin started.
That's right.
And the idea there was you can create, and again, the context there is 2009 was during the crash, the financial crisis, which started in the U.S. but spread throughout. No?
That's
Uh,
right. Mm-hmm.
it was triggered by bad mortgages that were being sold as investments, and it was around that time. Someone named Satoshi Nakamoto, whom we don't know who he is,
That's right.
started a system called Bitcoin, which is peer to peer, meaning if I want to pay you money through a blockchain, I can send it directly to you to
Mm-hmm.
eliminate the third parties. You don't need a bank,
Mm-hmm.
essentially. And so that started in 2009, and it started growing. And around 2017, a lot of other companies were introducing their own cryptocurrencies. And that became controversial. The Securities and Exchange Commission of the United States cracked down on that. Essentially, it is called initial coin offerings. But at the
Mm-hmm.
same time, the idea of a financial system without centralized control that's
Mm-hmm.
very transparent. They call it trustless, meaning you
Mm-hmm.
don't have to trust any third party to run it. Kept growing, and it's still growing right now. And a lot of investors started to come in. Bitcoin is the value of Bitcoin, although it peaked, it's down to, I forget what the price is now, uh, around 15,000 each. It peaked at
Mhm.
around 60,000 in
Mhm.
November. One Bitcoin. Um,
Mhm.
it's still valuable, and a lot of institutions are still interested in investing in it. One of the major retirement funds here wants to add Bitcoin to retirement funds, which is very controversial.
Mhm.
So it's still there. It's still worth almost $1 trillion, and that's why you have a lot of investment interest in it. I don't think it's going to go away, at least not in that quickly, because they still see the value of a blockchain based financial system, meaning you don't there's minimal centralized control in a financial system, but there's also ongoing pushback from regulators, and that's what the FTX crisis has now triggered more regulatory scrutiny, because in a typical financial system, you have if you're selling a financial product or a security, you have to disclose information. You
Mhm.
cannot be like if you're running a bank, right? You will have to be
Mhm.
audited. You will have to disclose information. Many of these companies, especially those are offshore, not operating in the U.S. Like FTX is actually not allowed to operate in the U.S. and Binance. They have their own U.S. affiliates that are
Mhm.
that have to answer to regulators in the U.S. Uh,
Mhm.
but that was not; those controls were not in place for a company like FTX and even Terra Luna, which crashed in the summer. So that's the focus now in terms of requiring these companies to disclose to investors how much money do you have, are you able to prevent a bank run. It's typical, like in the Philippines, right? If you have
Mhm.
if you're running a bank, you have to report. You have to make
Mhm.
sure that you have enough funds so that if everyone decides to take their money out, you will be able to do it. They will be able to do it.
Mhm. One of your more recent articles was about a what you called a surprising target for the FTX blame game,
Mhm.
uh, and you mentioned his institution, the SEC. So Gary Gensler is getting hit from on one side, but also receiving praise from another side. Can you walk us through the positions for and against him? What did he do, or what did he do? Um, uh, that's provoked such controversy.
So Gary Gensler is the chair of the Securities and Exchange Commission, which is
Mhm.
similar to the Philippines, the
Mhm.
SEC. And if you're going to sell a security, which is essentially a product that promises potentially a return to
Mhm.
consumers or to investors, like a stock of Jollibee. There's a suggestion there that if you invest in us and we will do a good job, that stock will grow in value. But to do that, you have to disclose a lot of information, including risk factors. What are the things that can go wrong? Uh, Gary Gensler has been pushing that most cryptocurrencies, except maybe Bitcoin, are actually securities. The industry is saying no, these are commodities, commodity
Mhm.
tokens. So
Mhm.
you don't need to be that strict about the regulations. And so
Mhm.
he's been attacked because he's been staunch in that belief, and he's been attacked by the industry for they call it regulation by enforcement, because the SEC's role is to interpret the laws passed by Congress and then enforce it, and then
Mhm.
create rules to
Mhm.
for companies, for investors, for bank for yeah for companies that are offering securities.
Mhm.
Um, and he has been criticized for relying a lot on enforcement actions. Like he went after some crypto lending companies. He required many crypto companies to uh, include in their balance sheets the assets that they have in terms of the holdings of customers.
Mhm.
And now the irony is now he's also being blamed indirectly, sometimes directly, for what happened, because they're saying that had he not been that strict a company like FTX would not have uh, gone to the Bahamas, which is where it's based, where the rules are less strict, and which it's easier to essentially do bad things
Mhm.
with the investments of other people. So that's been an interesting debate. There are those who say who agree with in a way that Gensler should have been much more open. The problem with the U.S. now is it's unclear. The SEC cannot just say, okay, what are you offering? Okay, that's a security. Okay, that one, that's not a security, so you can be traded as a commodity. Except for Bitcoin, there's been more clarity with Gensler. But the problem is, and that's something that even supporters of Gensler are arguing, they need new laws to be able to move forward because Bitcoin and cryptocurrencies and that industry is just so new.
But there's also a strain of praise for Gensler uh, along the lines of more people would have lost money
Uh-huh.
if he hadn't insisted on these stricter controls. I guess essentially arguing that whether it was in the Bahamas or somewhere else or in the United States, the way Bankman Fried ran FTX, they would end up with the same problems.
Right. I mean, FTX not allowed to operate in the U.S.
Mhm.
But this is crypto. This is blockchain. It's on the internet. The whole industry is so interconnected that even if that's true, there's
Uh-huh.
still some fallout impacting U.S. investors, U.S. based companies. But there are those who say, had he not been stricter, then they would have been operating in the U.S.
Mhm.
and the rules are still are still vague. That the same problems could have emerged.
That's that's an interesting argument.
Yeah,
How has the collapse of FTX affected crypto crypto in the United States
it's
and then
raised.
maybe the rest of the world? Yeah.
Yeah, it's raised more questions about. It was already a battered industry.
Mhm.
After the summer, like I said, it lost $2 trillion in value over the past
Mhm.
year. It's now under a billion. I think it's about 800 plus billion. It's under a trillion.
Mhm.
So that's become a big blow to the company. There's a bigger push toward uh, um, regulation of centralized entities. So this is another issue here. Crypto is supposed to be decentralized. Like if you have Bitcoin, you will know all the wallets that you are dealing with. You can actually track transactions. There is no names, but you can see the wallets, which is essentially just the series of numbers identifying the owner of the account. But a lot of these companies that are marketplaces, like Coinbase and FTX and Binance, are more centralized. There's a company and a group of people in the middle controlling the way the exchange operates. And so there is a bigger push now to regulate those entities, more centralized entities of crypto.
Is there any buzz right now about another FTX in the future? I mean, how are the other companies and exchanges doing?
It's already impacted. Um, Gemini is one major company that's already been had some reports of um, problems with investment. The problem is Sam Bankman-Fried and FTX itself. They lend money. They were supporting BlockFi, which is a major
Mhm.
crypto lending company, and actually was about to buy BlockFi. And there were other. You mentioned the VCs. Who essentially some of them who invested in FTX and eventually uh, adjusted the valuation of their investments to some of them
Mhm.
zero because of
Oh
what has
wow.
happened. Yeah.
Mhm. Um,
In terms of another exchange
uh-huh.
collapsing, fortunately for the industry, no. But it has definitely had an impact on the other exchanges, including Binance, in terms of the amount of volume. People are just backing out, and becoming. I mean, it's already been a problem since given inflation,
Mhm.
the market downturn, people already trading less and investing less. This has been another major blow for the industry.
Still bracketing the technology that's at the heart of this, no, blockchain. I want to ask, how do you deal as a reporter covering this beat? A very interesting beat. How do you deal with critics like Stephen Deal or the economist Nouriel Rubini,
Mhm.
who essentially call crypto a scam?
Mhm.
Uh, how do you report? How do you cover that? How do you approach their criticism?
You know what's fascinating about this, John? And this is the sort of, and I've said this publicly, this has been the
Mm-hmm.
most fascinating and the craziest beat, technology beat that I've covered
Mm-hmm.
since I started covering technology. I've talked to people. I know Steve. I know of Stephen Deal and Nouriel Nubrabini, but I've talked to other critics who are people I respect and who essentially say, Ben, this is a scam. This
Mm-hmm.
is really a total scam. But I also talk to other people who are also respected technologists, respected in the industry, who
Mm-hmm.
say, no, there are serious problems, but something else will come out of this. There is something to blockchain that can be useful. The concept of tokenization is has promise.
Mm-hmm.
Uh, uh, and it's sort of similar to what happened to the dot com boom and bust. I
Mm-hmm.
started covering tech during the dot com crash, where when it first started, there was a lot of excitement about the web and things you can do with it,
That's
and
right.
the new companies that emerged like Amazon, eBay.
Mm-hmm.
Uh, but then it crashed because some of the businesses that were put up were just not sustainable. There was a lot of bad investments that were carried out, and there was a lot of um, uh, get rich quick attitude that prevailed, which is similar to what happened in crypto. I mean, one of the uh, favorite sayings or mantras of people in the
Mm-hmm.
industries. Well, have fun staying poor, for those saying that to people who are critical
Mm-hmm.
or skeptical of the industry. So that's the problem. Is that I see a lot of parallels, but at the same time, we know what happened to the web, right? Uh, it eventually emerged into a companies and industries and tools that we now use. Like we're talking by video remotely, which was
Mm-hmm.
made possible by technologies in the web. So there are people. What's fascinating for me is it's unclear how it will unfold. I don't think it's going to go away just like that. There's
Mm-hmm.
so much capital, there's so much momentum, there's so much investments that are in it that I don't think even with the FTX crash and the really terrible year that the industry has had. I don't think it's going to die that
Mm-hmm.
quickly. But it's still it is fascinating to imagine or to think about how it's going to unfold.
We're dealing with large sums here, no? At one point, $3 trillion in total value, losing over $2 trillion in the last year, and so on. The collapse of a $32 billion exchange, huge sums of money. I want to ask, as an ordinary person, how much of this is real? I mean, is this in fact real money? I mean,
Bitcoin started as code. Satoshi Nakamoto sent out an email, "Hey, I
mhm,
found a way to do peer-to-peer transactions using blockchain. A blockchain is
mhm,
essentially uh, data, blocks of data that you just
that's
keep
right.
adding, right?
Mhm,
And you build a network, build a financial network based on that. When Bitcoin started, it just about a number of people, and they were, they call it mining. You have to have your computer solve a cryptographic problem, and then you get
mhm,
rewarded with a token.
mhm,
And so it started small, but it just kept growing, and now you have before you can there were miners who were doing it in their college dorms, students or software engineers who were studying computers. Now you can't compete with that anymore because you have big mining rigs usually set up in Montana or even other places where it's cold, so that you don't have to spend a lot on keeping the machines cool. And of course, there's the questions about the environmental impact of the industry. So in terms of how it emerged, um, Bitcoin became valuable because people thought and put value in it. I mean, it's as simple as that, and that's sort
That's
of
right.
what makes a lot of people uncomfortable with a lot of these tokens, which essentially critics have said it's a Ponzi, right? Ano
Mhm.
yung sa Tagalog? Paluwagan, right?
Mhm.
You invest and we promise that the others will invest and you will get a
Mhm.
return. The problem is when that confidence is broken, the whole thing collapses. But Bitcoin has enough momentum that it's going to keep growing and still be valuable for a certain amount of time.
Um, I think just shortly before Elon Musk finally proceeded with the takeover of Twitter, which he didn't want to do, he sold $4 billion worth of his Tesla stock,
Mhm.
and I think that's money that ordinary people can understand, right? So that's actually $4 billion that he has in his hands. Um, but even the value of his stocks, no, they fluctuate, and of course, Tesla shares have lost a huge amount of their value because of his disastrous takeover of Twitter. Uh, that seems to be like another kind of money, right? I
Mhm.
mean, so crypto, to extend the metaphor, is actual money when you use it to buy other digital assets. But can you actually use it to buy, like, groceries?
That's
uh,
there are people who are trying that. I mean, you can buy. There was a time when you can buy a Tesla with crypto,
that,
which
yes.
is like $50,000 for a car. The problem
Mhm.
is it's the value, the price is fluctuating too much. That if it's 50,000 now, and the value of your Bitcoin goes up to 60,000 the following week, then you've overpaid. Um,
That's right.
but there are, and that's sort of the direction of the industry. There are people who are trying to create a way to use Bitcoin and cryptocurrencies as a payment system. Um, El Salvador already embraced Bitcoin as legal tender, meaning you can use it to
Hmm.
to buy groceries. It's not that practical because how
Hmm.
a lot of not many people would want to own Bitcoin because it's so volatile, right? They would rather
Hmm.
own the dollar or have their money in the dollar or other currencies. So in terms of the way the industry is evolving, there are companies that are creating essentially bridges where you can convert Bitcoin into fiat, which is means regular money, or to
Hmm.
peso or to dollars, and
Hmm.
back. And although that's become a problem too, because essentially those are like bridges, and those become vulnerable to hacking and attacks. So while Bitcoin itself, in terms of the blockchain and the software, is
Hmm.
more or less secure, and that's sort of what made it attractive. They're calling it immutable. I think it's 1/40 million chances of hacking the network itself. But when you transfer or when you moving money back and forth, like to buy Bitcoin or using Bitcoin to transfer to regular money, that's where the dangers are. That answered your question.
Yeah. So looking ahead, I can understand what you're saying about uh, future uses for blockchain, the technology.
Mhm.
In supply
Yeah.
supply chain and so on and so forth. But do you see it as having a future in finance? Uh, is cryptocurrency really a sustainable form of block use of blockchain technology?
There are those who are pushing for. I mean, right now there's a push for they call it CBDCs, central bank digital currencies, which is
Hmm.
essentially an official. your currency in digital form. China already has that, the yuan.
Mm-hmm.
Uh, the U.S. is still discussing and even debating how to do that. And there are companies that have that offer stable coins, which is one coin is the equivalent of a dollar, and it's supposed to be backed up by that. You will have reserves for that, and that's already being used. And it's also used to buy cryptocurrencies that are much more volatile, but the stable coins themselves, um, analysts see that as a future in terms of eliminating the barriers or making moving money much less, much more, that's much smoother and much easier. In terms of the other cryptocurrencies, it still remains to be seen. And Bitcoin is not going to go away soon.
Mm-hmm.
So it's still something that attracts investors, attracts those who believe that it could be the future of money. I did a story on hedge funds that are going into Bitcoin in
Mm-hmm.
particular, and the founder, I asked him, do you own Bitcoin? I don't know. Why would I buy it? It's so unreliable and volatile. But he's building a hedge fund for investors who are interested in trading in it. Because for hedge funds, volatility is essentially gold, right? If you can figure out a way to buy and sell and to time that, you will make money. They call the profits that you will gain if you
Mm-hmm.
understand how Bitcoin moves. And a lot of people are using data, using AI to
Mm-hmm.
analyze it. And the proponents of Bitcoin and cryptocurrencies will argue, and it's true. This is not the first time that Bitcoin has crashed. Typically, it'll crash 50% and then rally back. So, in terms of the value of Bitcoin now, comparing it to 2010, 2011, it's still a big gain.
Mm-hmm.
So there are those who see it as, if you can use technology to understand how it moves, there's value in it. In terms of being used for payments and transactions, to some degree, it's already happening, but it's very limited. So that's where the questions are right now.
I think I can understand what the hedge fund owner is saying, and why he's doing that. But I cannot help but think that really crypto might be a game for the big players, because the big players can ride the highs and lows.
Mhm.
But if you're investing your life savings in crypto, you might lose all of that, and there's no getting back. This is part of that first an earlier question I asked about the magical thinking behind this.
Mhm.
Volatility is gold. Uh, I think it's true only for big players, or people who can afford to lose money when there's a downturn. Um, what does all these terms? So it's very important to understand, as you said, that what happened with FTX is just part of a turbulent period. No, I mean it goes some way back. So there's this turmoil. Maybe crypto as an industry is at an inflection point. What does this mean for the Philippines? No, next week we have the Philippine Blockchain Week.
Oh,
It's a major event. I looked at their program, dozens of speakers. What should the speakers be talking about?
I mean, the technology is fascinating. Like I said,
Mm-hmm.
the idea of an ecosystem with minimized centralized control
Mm-hmm.
is can be efficient. Can potentially the government accountability office of the U.S. actually
Mm-hmm.
did a study on where, because blockchain is not just for finance, right?
That's
As you
right.
mentioned, they're also studying. Oh, maybe we can do it for contracts, for
Mm-hmm.
mortgages, or
Mm-hmm.
for supply chain. And they did a study, and even for elections, there are people who are thinking maybe we can use this for elections. You don't need a very highly centralized form of system to conduct an election because it can be very transparent and everyone will see what's going on. And they did
Mm-hmm.
a study, and most of these use cases that they're proposing it's too dangerous. I mean, the way it's put is there are too many more attack surfaces where a hack can happen.
Okay. All
Uh,
right.
there are some possibilities for contracts or or keeping track of government expenses and stuff like that. But it's still too early for the other use cases. So for the Philippines, I mean, I'm guessing there were stories about NFTs
Mm-hmm.
and gaming. Crypto is big in gaming. Of some people who were attracted to play video games because there was a promise of profit, and they would. But the problem is, they would have to put in some money, right? Real money,
Mm-hmm.
convert into crypto tokens to participate, and because of the crash they lost some people lost money. So that's sort of the sad thing that I hope doesn't happen more in the Philippines, because it's happening here. The problem, that's where people like Gary Gensler and even those who are critical are saying you need more information. There's a lot of FOMO. They use the term FOMO, which is fear of missing out. Like I said, a popular saying in the world of crypto is "have fun staying poor," because if you don't participate, then you will be poor. I mean, that's sort of the extreme
Mm-hmm.
view, well, which is, to be honest, is irritating. And the problem is, if it's just this party is just, as you said, the people with the Elon Musks, or the Jack
Mm-hmm.
Dorseys, or the billionaires, or maybe some of the VCs, or
Mm-hmm.
the tech executives who can afford to lose maybe $100 million because it crashes. That's fine. The problem is when they start, and this happened last year, they've started to open the gates to the party and started inviting other people. And you have,
Mm-hmm.
movie stars like Matt Damon and others,
Mm-hmm.
an ad saying, this is this is the future, and don't miss it. And
Mm-hmm.
then it crashed. So the problem is, uh, and I hope it doesn't happen in the Philippines, is when you start to promote a technology that may have some promise,
Mm-hmm.
but it's still untested, and there's so much volatility in it that if you're
Mm-hmm.
not prepared, if you're not educated about what's going on, you can lose a lot of money and you can get hurt. And that's what happened in the summer. There were a lot of filings of people whose money got trapped in many of the companies that went bankrupt. And at the same time, regulators cannot, they because these are supposedly decentralized entities but operating within a centralized ecosystems, it becomes hard for them to recover those funds.
Ben, you're leaving protocol but still looking to report on crypto and fintech. And of course, you covered technology for Dow Jones Market Watch. Um, what are some of the most important takeaways you have from reporting on tech and on crypto? Like, for instance, do you see any trends um, we can anticipate?
In reporting, in the
So,
industry,
so yeah.
or
So first, your reflections on your reporting, and then maybe some trend spotting.
yeah, it's, I mean, like I said, this is sort of the most fascinating and also the weirdest technology beat that I've taken while covering technology, because it's just so unpredictable. There are a lot of fascinating characters. Like I said, there are I can name groups of people I respect who say this is a scam, and
Mm-hmm.
also groups of people who I also respect who say no, there is a potential here. We just have to find it and let it unfold.
Mm-hmm.
And of course, there are those who are just personalities who are just really, like I said, those who like to say have fun staying poor, and
Mm-hmm.
and presenting crypto as if it's um,
The gold rush.
yeah, the major game that will liberate. I mean, they like to use the phrase they will liberate, lead to the economic freedom of mankind or something like that, which is really,
Mm-hmm.
those like those kinds of platitudes.
Mm-hmm.
Uh, in many ways, even though the industry is about 13 years old now, 14 years old now, it's still
Mhm.
young and it's still growing, it's still unfolding. And like I said, for me as a reporter, what's fascinating is I don't know, and I don't think anyone knows where it's going to go, but it will continue, even despite this crash. It's just so big. There's just so much momentum. People are really invested in it, and for a reporter, that's fun. I mean, to be able to figure out and to be there to witness where a specific story ends up.
Ben, we're running long, but allow me to ask one last question. Um, I'm 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 very interested to hear what you think. As you just said, you have sources that you respect who say it's a scam. You have sources who you respect who say there's real potential here. So of course the beat itself is very contentious. I wanted to ask you, maybe not for lessons, but maybe suggestions for people covering disinformation. Uh, uh, how should, uh, based on what you've experienced, how should we cover disinformation stories?
I mean, that's also a problem in the U.S., as you probably know.
Mhm.
Uh, I think from maybe 6 or 5 years ago, there's been more a realization that there's a lot of the role of social networks, the role of Twitter, and the role of mainstream media in amplifying and spreading lies and really false information
Mhm.
is a problem. I think the results of the last midterm elections in the U.S. is sort of a step in the right direction, because there were people who did not believe the lies, about stolen elections and rigging and the very extreme views. How do we cover? It's it's a process. I mean, for me, I mean, I follow Twitter. There's a phenomenon called crypto Twitter, which is a lot
Mhm.
of discussions and speculations and
Mhm.
accusations are on Twitter. But I use it only as a guide. I don't, I'm always very careful about
Mhm.
citing sources directly. I double check, and that's sort of a skill, I guess, that we all have to develop as journalists. That there's more noise now. I mean, compared to when we started, right, John?
Yeah. Mhm.
When in the age of newspapers, where the information is much slower, much easier to it's much easier to find out where it's going, where it came from. But now, if you start a lie, like this person is a murderer, it'll spread to a million people, and then by the time you try to take it back, or if someone tries to clarify that that's not true, and maybe that denial or clarification only reaches 500,000 people, then
Mhm.
you have half a million who believe it or misled. And so for me, it's really important to use these tools, and these are important. Like Twitter is very important. I mean,
Mhm.
despite what has happened in terms of
Mhm.
getting quick insights and maybe even potentially quick information about what's
Mhm.
going on. But I've long ago stepped back from you have to be first, and to be reckless
Exactly. Yeah.
about
Mhm.
reporting. And I think a lot of news publications, at least those who are responsible, are much more conscious of that. That it's so easy to make a mistake. I mean, there's a recent report now of a wire service that got some information wrong related to the war in Ukraine, right? Which is very critical
That's
information.
right.
And for me, it's really be more conscientious about how you treat information, because it moves very fast now. Meaning, even the lies move very fast.
Thanks, Ben. So yeah, recognize there's so much more noise out there. Always take the next step. Uh, um, Valuable lessons for doing our work as journalists. So to Ben Pimentel in San Francisco, thank you for an illuminating, non-cryptic discussion on crypto. Your work helps define the parameters of the future shape of the public square. Again, many thanks.
Maraming salamat.
That's it for us tonight. The next step for engaged citizens is always to take a more active part in rebuilding our democracy. See you in the public square. This is John Nery. Thank you and good night.